The angel investment scene, it's of course much better than what it used to be 2-3 years ago. It still is very, very difficult to raise angel money, angel capital for a lot of unproven ideas.
Some of the funds come in late and then don't have the time horizon to let the venture build value. And then you have unproductive conversation between the promoters and the investors.
Institutional funding, particularly in the very early stages, is very limited. And if you are doing something which is either not in the conventional markets or in the traditional business, it's very difficult to raise money.
Isn't it ironic when an entrepreneur says that it was difficult to raise seed funding because investors thought the business was different and unproven? Now, one would imagine a new, differentiated, perhaps disruptive business is what investors would chase. But back in 2005, this was a big ask. After the 2001 bloodbath, investors willing to take a bet on ideas were few. Besides, there was big money in late-stage deals. But some investors thought differently and took a plunge. So on the show this week, we meet three of them: Bharati Jacob, Pravin Gandhi and Mahesh Murthy of Seedfund.
We at Seedfund invest in pre-revenue companies, early revenue companies, so we are really the highest risk takers. Building a company is really a marathon. Marathon that's made up of 100-meter sprints.
You have to test the passion of the entrepreneur, and kind of distinguish it from obsession.
I don't think really a financial guy doing Microsoft Excel understands the business as well as somebody who has hired somebody, fired somebody, lost a business, won a business, or stayed up sleepless nights figuring out whether he could make the salary next month.
Seedfund was set up in 2006 and is today the biggest seed stage fund in India, having invested in 24 ventures so far. The team at Seedfund believes that it's possible to start an enterprise in India for under $1 million, and its investment strategy revolves around simply finding any company that solves real problems of real consumers in real India. So far, 2 funds have been raised and both have been sector agnostic. The first fund has already had a successful 9x exit in Carvale.com.
Whole way to look at any deal is not to say I will only do technology, I will only do this, I will only do that. It is to look at whether the sector has an opportunity to succeed in India.
And the trio is very conscious of looking at every plan they receive from the position of an Indian consumer.
So what catches our eye is something different and unique, which goes to your first question about, that we invest in unproven sectors. So I think something different that we haven't seen before, or some of them speak to us as consumers.
The question they ask is simple: will this product or service solve a pain point in my life? And for 3 of their most talked about investments to date, redBus, Vaatsalya and EduSports, the answer is a resounding yes.
Typically you look at, let's say, a company like redBus. I mean, it's a company that many of the investors hadn't touched. And how that company essentially got formed in the first place was because there are these technology guys who used to work at TI, Texas Instrument, and had difficulty going home from Bangalore to their hometowns because they couldn't find bus tickets in time. So they said that we have to solve this problem. So imagine the whole passion behind the fact that they believed and we agreed that this is a problem that needs to be solved.
The entrepreneurs are all really passionate about fitness, about sports, and they're playing to their strengths, so they're batting from their strength. And again, they've signed up close to 300 schools so across India. It doesn't happen if there wasn't a consumer need or a customer felt the need. And I think given the trend in India today of everybody becoming a lot more aware of their fitness levels and of their own kids' fitness levels, it tied in very well with changing parents' needs or changing children's needs or schools' needs.
What we figured out is that there is space for a high quality 21st century cutting edge hospital in those smaller towns. And I think what we've done is, with 20-25 hospitals right now, we've built a successful brand already. It's the largest chain of semi-urban hospitals in India currently. It's solving a uniquely Indian problem in a uniquely Indian way, and I really like that. I really like the fact that it's not the application of some Silicon Valley technology or something in China here. It's really the application of an Indian solution to an Indian problem.
Getting the execution right is top priority for Seedfund's investee companies. In fact, that's exactly what's been driving Ashwin Nayak, founder and CEO of Vaatsalya, a hospital chain in Tier 2 and Tier 3 cities. Nayak says that not only is the chemistry between the partners at Seedfund evident, it's their huge operational experience that makes a difference to first-time entrepreneurs like him.
Ashwin Nayak describes Vaatsalya as a venture that's not too commercial and not too social, and says it was exactly this proposition that kept many VCs at bay in Series A. But not Seedfund, who looked at this Tier 2 hospital chain as an emerging market leader.
The thing that impressed me most when I had the first meeting was at the speed at which they made decisions. All the 4 partners were in the same room, and about half an hour into the discussion, they said, we want to do this deal. And then they said, let's figure out what are the specifics. So they sort of started from very high end and then sort of drilled into the details. The second thing was that all of them had operating experiences. So they had built companies in the past, so that was very important for me that they would relate to us. So even though they come from the background of having built companies, they have sort of not come in and gotten into the details. They believe that the board member should be a advisor to the founders and not sort of get into the details of running the company. In that sense, if you look at the traditional venture capital funds, I would say that the investment funds are more interested in their investment, but with Seedfund, I believe that they are generally interested in the founders themselves and how they can help the founders to build a better business.
And Faninder Sama seconds the value of mentor capital. For a team that didn't know what VC stood for when Bharati Jacob called them, finding an investor who had more time but limited money to pump in was just what they needed.
The first presentation when we made to Bharati, we had actually said, okay, we want to build a company which is worth 1 crore and we are willing to give 30% of the equity for 30 lakh rupees. And then, yeah, and then Bharati, when she looked at it, actually laughed at it and said, okay, fine, show me your business plan. And when we showed her the business plan, she said, okay, increase these expenses, reduce the revenue by half and etc. and all that. And we iterated. And we iterated multiple times. Actually, the 7th iteration of that, which was co-built with the investor, Bharati, said that we actually need about 3 crore rupees to build the company for 1 year and take to a stage where we are ripe for raising another round of funding. And that was a complete eye-opener for us because 3 crore in our mind was a huge amount of capital.
So apart from a winning idea, what does the team at Seedfund look for? Here's their checklist.
I think the first thing we look at is this even fundable by us? So I remember last year somebody set us a plan for 10,000 crore rupees because he wanted to make, I think, 160 movies. So I think we all laughed about it and pretty much sent it to the delete file. Is this the kind of business that we understand? If somebody comes with a chemical product factory, we don't know anything about chemical industry, we don't know anything about deep biotech. So we stick to our knitting, we stick to a few things we know.
You see a plan, you have to sort of believe that there are very few questions for you to ask, which means that the entrepreneur, when presenting to you, has thought through a lot of the issues that will come while building the companies.
We come across entrepreneurs who will give you half the information when they're pitching, or rosy picture, then they won't share with you the other half, or that there were issues or in the team or anything like that, even before we invest. So again, lack of transparency doesn't work. Arrogance, unwillingness to listen to another point of view. To me, those are red flags, because if you're not, in one-on-one interaction, if you're not willing to listen to another person's point of view, how are you going to listen to your consumers ever?
On that note, it's time for us to take a break here on India's Angels. But coming up, we take a look at what keeps Seedfund going.
I only bully everybody.
That's what he thinks. And we, you know, it's often nice to help him think that, but that's all right.